We both ended up with the same phrase describing Jay Powell, the new Fed chairman. There's a new sheriff in town. He's the Gary Cooper of this high noon. Explain to viewers why you think he's the new sheriff in town and why that's such an appropriate way to phrase it.
Well, he went out of his way to be plain spoken. He said that at the beginning of the press conference. What did they do in terms of the decision? They delivered as they promised. They shortened the statement, took out forward guidance, and they no longer say that the policy rate will be below its neutral level for some time. Why? Because they aren't really sure what the neutral rate. It's overpromising to say that, and they may get there quicker than they think, and they're probably going to go over that rate. The Federal Reserve is going to actually be firm policy next year and into 2020. In the press conference, he stuck in his own lane, didn't venture into providing advice on other policies. And
especially the politically charged passing lanes, really tried to avoid those.
Oh, yeah, his lane is pretty narrow. Even when there were plausible questions that might influence at least your forecast of the economy, he didn't want to talk about trade. He didn't talk about the rest of the world.
Now, Vincent, let me interrupt you a little bit because I want to get as much out of your brain as I can. One of my friends texted me this morning, and I happen to agree with him, but it's pretty strong stuff. He said the era of too big to fail, save the bank mentality at any cost is gone in the form of Jay Powell. And my answer to him was they're going to go back to more of it being a nudger than masters of the universe. Would you agree with those comments?
I think that's right. I think you never say never. There is a hurdle high enough that in events you could get Jay Powell out of his comfort zone. But he is much more comfortable in market volatility, much more comfortable in having markets determine prices, and he's probably more comfortable and confident that market economies generate good outcomes if you just don't get in the way.
Oh, yeah, and I'll tell you what, every trader I talk to has this real deep feeling for exactly what we're talking about. Traders like the markets to create the outcomes, not pre-designed by policymakers, which leads me to Mario Draghi. We have about a minute left. You know, I don't understand it. You know, for a while, the big term in the world was synchronized growth. I don't understand how Mario Draghi's ever going to synchronize policy to such a varied group of countries and economies whose personal citizens do not really want to meld cultures, which makes it very difficult to meld financial cultures. Your thoughts?
Think about economic performance. Italy hasn't even recovered its level of real GDP back in 2008. Some of those economies like Germany are working above capacity. Some are still considerably below capacity. Hard to set monetary policy for that whole group. And what did Mario Draghi do? He basically laid out the path for monetary policy until he retires back in October 2019. We heard about the taper done this year, and we heard they're not even going to think about raising rates for another 9 months. That's not data-dependent monetary policy. That's not made
real
meeting
quickly,
by meeting.
Vincent, we're out of time. You know what traders tell me the code for everything he said there that you repeated was? Is we can't buy any securities because there's not a whole lot left, and in terms of raising rates, it'll never fly right now. That's what traders heard. Let's see what the markets do.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.